The home builders have caught fire this year. We know that, especially over the last couple of months. They've been red hot. And today's terrific jobs report certainly doesn't hurt. But earlier this year, before interest rates plummeted, there was a lot of fear. There was a lot of confusion about exactly where housing was going. Back at the beginning of March, we had this thing. It was a face-off. Analysts against analysts, hitting the bulls with the bears against each other on the home building stocks. After tallying up the evidence, I told you to believe the bulls because Ivy Zelman, the CEO of Zelman and Associates and the best housing analyst on Wall Street, was making arguments that I felt were too compelling to ignore. She said the home builders were set up for a fabulous year, and it just turns out that she completely nailed it. So now that the home builders have soared into the stratosphere, it's time to declare victory, I think. Try to figure out where this group might be headed next. First, though, I need you to remember the context of Zelman's incredible call. After rallying hard beginning in 2017, the home builders peaked in early 2018, and then they spent nearly all of last year working their way lower, thanks to rising raw costs, especially lumber, but also labor, and a series of lockstep interest rate hikes from the Fed that were ill-advised. But as the stock market rolled over in the fourth quarter, the sector finally bottomed. Then in January, Fed Chief Jay Powell realized the error of his ways, taking a much more dovish tone, which turned everything around. After rallying for a couple of months, though, the home builders paused at the beginning of March. All right. That's when we took a closer look at the industry. We said, you know what? What do we make of the stocks now? We were focusing on some very bullish research from Zelman and Associates and a much more bearish view from J.P. Morgan. Zelman's argument, she pointed out that the estimates for the home builders had gotten low enough to be beatable. That's the holy grail of the upside surprise. And she also said her channel checks revealed positive momentum and great order activity through early March. Basically, the bar had been lowered and things were finally improving, which meant the estimates could be beaten. And yes, it meant that the analysts would have to raise their forecast, which is exactly what you need. All aboard! I told you to believe Zelman because she's the axe in the home builders. The analyst who understands this industry better than anyone else. That's that term axe is a term of art on Wall Street. It means the one you should really listen to. At the time, she was making a major contrarian call. And the great thing about being contrarian is that when you're right, you tend to be very, very right. Since we checked in on her research in March, the S&P Home Builders ETF, the XHB, is up more than 20%. And the best of the home builders are up much more than that. You had to believe the axe because the reality of the situation turns out to be more bullish for the home builders than anyone expected, except for maybe Zelman. First, long-term interest rates collapsed. The benchmark 10-year U.S. Treasury currently yields just 1.72%. That's insanely low by historical standards, even as it's up nearly 30 basis points from its lows over the summer. Around this time last year, the 10-year was at 3.25%. Borrowing has gotten much cheaper. Right now, you can get a 30-year fixed mortgage for just 3.8%, and that is a huge boom for the home builders. Makes a home much less expensive. On top of that, the Federal Reserve has now given us 3 rate cuts this year. They just did it again on Wednesday, which was exactly what we needed to breathe new life in the economy. That's one reason why the consumer economy is so strong and the job market's still humming. Plus, there's the wealth effect. A higher stock market, which we sure have after these records, right, means people have more money to spend on big-ticket items like houses. The Dow, the S&P, and the NASDAQ are all up more than 20% for the year. And that is a major wealth halo for this economy, and we don't talk about it enough because you'd think, well, how can people be so flush if wages aren't going up? Well, you know what? They do have 401ks. They do have IRAs. They do own stocks. And that's how we got this flood of mortgage applications. By August, we also started picking up a flood in refinancing activity and a serious inflection in actual home sales, something the bears just didn't see. Meanwhile, the slowdown in the global economy has been fabulous for the domestic home builders because it put real downward pressure on commodity costs. Building a house is a lot cheaper than it was a year ago. Steel, aluminum, most importantly, lumber, all cheaper. Put it all together, and you got a recipe for a spectacular run for the home builders. Since the end of July, D.R. Horton, up 16%. KB Homes, up 38%. Lennar, pole vaulting, 28%. Pulte Group jumped 27%. Taylor Morrison gained 11%. Toll Brothers up 13%. TriPoint Group rallied more than 15%. However, most of these gains are from August and September. In October, many of these stocks, well, let's just say they stalled, okay, or at least it decelerated a bit. We'll go back to the chart here, but that's why we wanted to check back in with Ivy Zelman and her team at Zelman Associates, because the axe was so right. In mid-September, Zelman published a proprietary home building survey for August, which showed the biggest surge in year-over-year order growth in more than 4 years. In response, Zelman raised her price targets for the home builders by 7% on average. You pay more for stocks when you expect better growth. And how good could these numbers get? Let me give you a little snippet that I read. Quote, we estimate at least 500 basis points of upside potential to our current estimates of 9% aggregate order increase for the publics, period, then end quote. Meaning, we're talking about order growth in the mid-teens. In other words, in September, Zelman was confident the home builders had a lot more room to run. Since then, things have only gotten better. About 3 weeks ago, Zelman published another note titled, quote, raising third quarter builder order estimates, end quote. After the terrific results from KB Homes and Lennar, she's now predicting 15% order growth across the whole group this quarter. That's incredible. No wonder the economy's strong, the domestic economy. That's up from just 7% last quarter. She notes that pricing trends are improving, which will start to boost margins for the homebuilders, perhaps as soon as the current quarter. However, the stocks have run. So Zelman warned that we may get some near-term profit-taking during the earnings season. She says not to worry. Any pullback should be short-lived. Sure enough, in the past few weeks, there's been some profit-taking in the home builders, and I think you need to treat this as a buying opportunity. I am, as you know, a big fan of Lennar, have been ever since I worked with Leonard Miller when I was at Goldman Sachs. He's no longer with us, but Stu Miller is, in the 1980s. I mean, this is the second largest player. It's an incredibly good home builder. Reported an awesome quarter just a month ago. Stock selling at just 10 times earnings. That's crazy. I like D.R. Horton, one of Zelman's faves, which reports the week after next. I expected good things. Toll Brothers, the high-end home builder, reported great numbers in August, but it was actually down for October. And now trades at just 10 times earnings. Normally, such a low multiple means Wall Street doesn't believe the earnings estimates will be made. I think that's absurd. Toll's a buy before they report again in December. Finally, you might want to consider Taylor Morrison. Earlier this week, they reported a solid quarter that Wall Street considered underwhelming, and the stock got hammered. Now, we had CEO Sheryl Palmer on the show not too long ago. I thought she told a terrific story. 8 times earnings? Buy. The bottom line, Ivy Zelman and her team at Zelman Associates knocked it out of the park when they called for a housing rally back in March. And now that the home builders have pulled back from their highs, I think you're getting a chance to pounce again. Zelman still likes it. So do I. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.